All right, everybody. Stocks by the numbers. Welcome back. Wanted to take a quick look here at Vertiv Holdings, ticker symbol VRT, listed here on the New York Stock Exchange. As you can tell, this stock has been on an absolute tear. That is an understatement. This stock is up roughly 600% just over the course of about the last 12 months, going from these lows here of 11.95, hitting new highs today of 86.63, then pulling back about 4 points here. Markets happened to reverse. They went red. Everything kind of started to sell off. But I will say this company, in my opinion, could definitely be a phenomenal long-term hold. And I'm sure anyone who got involved here at any point is probably obviously very hyped and pumped about the stock. However, the one thing I will say is technically they did slightly miss on the revenue side the last couple of quarters. As you see here, slight miss last quarter. Beating on the EPS side, the company is very profitable, and we can see that we're coming in consistently above analyst expectations on the EPS side, beating by almost 5% here about a month ago, third week of February. But you can see here posting 1.865 billion on estimates of 1.885 billion. Company missed by about 19.5 million, or roughly 1%. On that news, they also issued a little bit of weaker guidance moving forward for the next quarter coming up. And we can see that the stock actually dipped initially on this news, because it technically is a negative, drops down to this fib here. This is a one-year chart, by the way. Drops down to the bottom fib here, 55 even, as you can see, top left of your screen. Then from there, it just basically goes on a tear. So in my opinion, at that level, we could have made the argument that the stock was undervalued, and because they're in like they're in the data center cooling industry, right? And they recently partnered up with Nvidia, so I can appreciate the fact that there's a lot of hype behind this stock, and of course it happened to run up here after this last quarter. However, again, technically they did miss, and I'm looking at two misses here on the revenue side. Now, of course, not necessarily a big red flag, but technically it is a miss, right? And overall, though, the stock looks pretty good. I will say again, we have a market cap here, we'll call it 31.5 billion. We have a PE of just a touch below 70, which of course could be viewed as a little high. We have a beta of 1. Again, the beta, volatility of the stock in relation to the overall volatility of the market. So that means it's essentially just as volatile as the market. The EPS side, again, has been doing very, very well. You're looking for a dip here next quarter back down to 35 cents a share. But the company has beaten the last 4 quarters in a row on the EPS side. This is going to be the April quarter, this time the year before, and you can see the company post 24 cents a share on estimates of only 17 cents a share, beating by over 44%. So the profitability side moving forward may not be the issue. It may actually be the revenue side again for next quarter moving forward, but I will say, looking over the years here, we can see the company was down here at 443 billion, 43 billion in 19 and 20 respectively, and then since the pandemic, you can see that the revenue of the company has been basically climbing at very, very nice, about 10-15% year over year, it looks like, going from the 4.3 billion mark roughly to 5 billion in 21, almost 5.7 billion in 22, now up to 6.86 billion there in 23. So if we just look at the revenue to market cap comparison, we could very well make the argument that the stock is still potentially undervalued here. Again, if we round that to around 7 billion, and again, we have a market cap of 31.5 billion, we're only trading about 4.5 times that number. So for a tech stock, especially recently with the announcement of the ties to Nvidia, for it to be trading 4.5 times annual revenue, in my opinion, could be viewed as undervalued. However, again, at the same time, we technically missed revenue 2 quarters in a row, and we have a 70 PE. So I don't know necessarily if we're going to see this $55 level again, but see how it bounced around right here before dropping and then taking that next leg higher, like right there, maybe the low 70s. So in my opinion, we can see maybe like a 10 or 12 point sell-off here from this level. But of course, if we continue to climb and hit highs and get above 90 plus, I could understand that as well. But again, because of the recent misses and the weaker guidance moving forward, in my opinion, this stock actually should have probably stayed down in the 60s, maybe approaching back to the 70s. Climbing up here, in my opinion, isn't really making too much sense. But overall, again, the company is doing very, very well. So I can't exactly bash them, but as you see here, this was announced on March 19th, exactly 1 week ago. Vertiv Holdings said Monday it joined Nvidia's partner network as a consultant for power and cooling technology needed for the chip makers' advanced data centers. The company said it will help develop liquid cooling technology for Nvidia accelerated data centers. Partners in the Nvidia network can access benefits including technical support. Financial details were not disclosed, of course, but obviously that is good news, and that happened about a week ago. That was back here on March 19th, and you can see the stock was sitting at about the mid to high 70 range, and now we hit the mid to higher 80 range here today off of that continued momentum, in my opinion. You can even see the little gap up right there as well. What was the high here on this candle? High was 79.66, and then we gapped up and we only hit right there. You can see the low of 80.92. So technically we do have a gap fill that could potentially happen there, 79.66. And if we sell off, fill that gap, we could, again, like I said, potentially break and come back down here to maybe the low 70s, or maybe even this right here, this 0.68 fib of 69.45. That would essentially maybe meet up right around the moving average. There's the 20-day moving average that's been climbing, obviously. So it might sell off and meet up there with the fib and the moving average, and then potentially bounce and actually go back higher. Because I'm sure that people are going to keep buying into this company, especially a week or two before earnings are released. But overall, everyone seems pretty bullish on it. As you see here, Vertiv maintained at buy, B of A. Price target raised to 90 from 80. Okay, well, we're almost there. But okay, we're hitting highs. Elon says AI will create an energy crisis. I do agree with that, and we're also hearing about the potential energy crisis and in regards to the electric vehicles, if you recall. I remember when they were questioning all of these CEOs of these EV companies, they were kind of looking at the actual power required to power these vehicles. And they were basically saying that we kind of can't sustain it right now. Yet they're kind of continuously pushing for this all across the board EV situation. So as of right now, we actually might not be able to do it. But I do know that AI and all this new tech does require a lot more energy and a lot more power. So I mean, that could be a little bit of a shorter term issue, but I have a feeling that in the long term, they'll probably be able to figure it out somehow. Evercore adjusts price target to 80 from 75, maintains outperform. Yeah, this company also pays a dividend, by the way, as you see here. Dividend ex-dividend date was March 18th, payment date March 28th. Now, a lot of people get confused with these dates. So once again, the ex-dividend date is the last day that you have to be like on file of owning shares of this company to receive the dividend on the payment date of March 28th, 2024, right? So the X date is the last day you can get in to get the next dividend. Dividend payment date is when the actual dividend is paid out. I know a lot of people get them confused, so just a quick little update there. But the company does pay a dividend, recently upped it to 3 cents. Well, showing 2.5, but it was 1 cent. So we're slowly increasing our dividend here. We're moving. I know there were more upgrades. Here we go. Vertiv maintained at overweight by JP Morgan. That was the 22nd. That was technically after these earnings came out. Raised price target to 65 from 53, but again, it was here. It was in the 60s and then dropped to 55. So, you know, to maintain 60, understandable. Here we got a price target increase from 50 to 56, maintains neutral rating, okay? That's pretty conservative in my opinion. Deutsche Bank, price target raised from 52 to 69, maintains buy rating. And we can see, yeah, it was down 8%. So let's look at the actual report here. You can see last quarter, 56 cents a share on the EPS side. Same quarter the year before, 28 cents. So profitability basically almost doubled year over year. Expectation was 53 cents. Wall Street 50 to 56. Revenue rose 12.7% to 1.87 billion from a year ago. This is what I mean. This year-over-year growth, 10, 12, 15%, cannot be denied. So the fact that the stock has been climbing up, whether we can look at, the book value is much lower than the current stock price, understandable that we could potentially find a couple of metrics that could indicate that a sell-off could happen, and we may be able to get a little bit more of an attractive price. But like I said, whether we have any pops or drops here in the shorter term, if you want to tell me that a year from now this is going to be like a $130 stock, in my opinion, I would actually believe that, and I think it would be justified. We're moving. No, wait. There was another article. Bear with me. Here we go. Shares tumbling. Net sales rose. Right, we're up to 1.86 billion. We technically missed. Organic orders rose 23% year over year in the quarter. Phenomenal. With a backlog of $5.5 billion at the end of the year. So this is a company that is not only getting consistent business and getting new business, but also has a very high demand for what they bring to the table. As you see here, $5.5 billion backlog, which is why I'm saying again, if we do have a sell-off, maybe 10, 12 points, back to around that 71 level, maybe that 69.5 level, but then from there, in my opinion, it should actually immediately bounce and probably go back to highs, as I said, 90 plus afterwards. In my opinion. Adjusted operating profit grew 57% year over year. Ridiculous. And adjusted operating margin expanded 500 basis points year over year to 17.7%. Higher volume, improved productivity. Okay, we got some positive operating cash flow. So Vertiv Holdings sees first quarter revenue of 1.575 billion to 1.625 billion versus 1.62 billion estimate, and the adjusted EPS of 32 to 36 cents a share versus estimates of 37 cents a share. So this may be the first quarter in a while coming up. This is the next quarter coming in roughly about 2 months. But this may be the first quarter in a while that the company actually does happen to miss on the EPS side. And they're also saying that the top range of what they're expecting is basically what Wall Street was initially expecting. So we could potentially see another slightly light revenue miss from VRT in about 2 months when this company posts next quarter earnings. The company expects fiscal year 24 revenue of 7.515 billion to 7.655 billion. First Street view of 7.54 billion. Okay, that doesn't seem to be an issue. An adjusted EPS of 220 to 226 compared to estimates of 224. All right, well, over the next 1 to 2 quarters, they can also potentially raise guidance moving forward and readjust these numbers. So, in my opinion, this isn't really a red flag, even though we could potentially say, they're a little light maybe on that EPS range. In my opinion, this right here, this negative outlook for the next quarter moving forward, slightly light potentially on the revenue and on the EPS. This is why I said, in my opinion, that sell-off back down to 55, that fib, dropping 8-9% on the news of this release that day, in my opinion, 110% justified. But again, people, they're looking at the numbers, they're looking at the backlog, so they saw the big dip, so a lot of people bought the dip, and then the stock continued to climb up and rally off of that volume. And then, of course, in my opinion, you had that news come out about the partnership with Nvidia. So that is what I feel personally is probably keeping the stock up here as of late. CEO said, quote, "We see tremendous opportunity ahead as the data center needs of AI drive additional market demand. Our fourth quarter acquisition of CoolTera and our continued commitment to supporting our customers reinforce our strong position in liquid cooling for high-density compute applications driven by AI demand." So, again, on record, I want to say I believe that this stock will probably be worth significantly more than where we're currently trading inside of the next 12 to 24 months. So this definitely could be, in my opinion, a very, very good long-term hold. But again, because the company technically just missed on the revenue side back-to-back quarters and issued weak outlook, I just want you to know up here at 82.67, with the markets basically still sitting near these highs for reasons, again, unbeknownst to me, but we'll push that to the side. But I just want to say, if you decided hypothetically to go all in today on VRT at 82.67 and then it pulls back to like 72.67, basically I'm just letting you know, in my opinion, you really shouldn't be blindsided by that pullback. And it very well could happen. But we can see across essentially every segment and basically across every country and demographic, the revenue has been growing nicely. Actually, a slight dip here from 22 to 23 overseas in Asia Pacific, but in my opinion, it's really not a red flag. On the EPS side, again, quarterly, we can see just one miss here, Q4 of 22 over the last 8 quarters. So the company has been doing very well on the profitability side. And again, we're seeing a dip next quarter back down to 35 cents, and then from there back up to 55 and above 60 and above 70 moving forward. So over time, I'm sure this is why I'm saying, in my opinion, it probably should work out well. The stock has been raging. And of course, before the big rage, the company was missing yearly on these EPS estimates, but we can see for 2023, they came in a little over 1% above that 175 mark, posting 177 for fiscal 23. On the revenue side, we can see, again, back-to-back misses technically on the revenue side, but the company is growing at a very, very nice rate. So this is why, again, even though they missed, and a lot of people think that's why it went down. In my opinion, that is not the reason why it went down, because it's almost similar to a situation like a SoundHound, right? It's like we want to see the revenue grow, and if we have higher estimates quarter over quarter, yes, the company may struggle to precisely meet that estimate, but if we're consistently seeing growth in revenue and we're at least coming close to those estimates, then the stock may get rewarded. And I think, in my opinion, that's what you're seeing here with Vertiv, VRT. And again, these two slight misses here, 0.5%, 1%, in my opinion, not a massive red flag. Again, that weak outlook for the next quarter here moving forward, Q1 of 24, in my opinion, was the reason why the stock dropped to 55, and in my opinion, was 110% justified. However, we dropped to 55, and again today, we're up here north of 86.5, hitting new 52-week highs. So, we're talking, what is that? Over a 50% move from the initial drop on the weaker outlook. You understand? So the stock is literally raging 40, 50% over about the last 4 or 5 weeks, even though they technically just issued weak outlook for Q1 24. So this is why, again, I'm saying that a pullback of 10, 12, 15 points, in my opinion, could be very well justified and could happen. But over the quarters, for the most part, the company beat 5 of the last 8 quarters. So again, that's why I'm saying not really a red flag. And we can see a slight dip here in Q1, 1.6 billion. And we can see the year before the company posted 152 on 141. So we do have a chance to potentially beat that number. But after that, you can see the revenue is basically picking up that growth right where it left off there at Q4. And we're jumping up to 189 billion and then almost 2 billion. And then to close out 24, estimates of 2.15 billion. So the revenue growth is forecasted to continue. And we can see for 24, 761 billion. We looked at those numbers. They seem like they were pretty much in line, but rolling to 25, you can see estimates of 8.4 billion for the year, and then 26 estimates of 9.14 billion. So again, we're looking for several hundred million to potentially that 1 billion mark of revenue growth year over year. The percentages look good, and we'll look at some other metrics as well, but overall, in my opinion, I do like this stock. Again, we can see the dividend jumped up here from 1 cent to about 3 cents here, paying out 2.5 cents the last couple of quarters. Let's check some of these statistics very quickly. We have a PE sitting here at 70. Now, the last couple of quarters before that, it was technically lower. Nice car going by. However, again, the stock just went on like a 40, 50% run after technically releasing negatives. So this is why I'm saying I feel like here in the short term, we're flying high and some of these metrics are inflated off of this recent Nvidia news. However, I personally am expecting a slight pullback to happen, and we could potentially see this PE drop back down into the 50s, maybe potentially. But in my opinion, not really a main metric I would use, believe it or not. Price to sales up here at 4.66 times sales. That's the highest it's been going back about the last 7 or 8 quarters. Price to cash flow sitting here at 35.5. That is higher than where we were the last couple of quarters. Of course, not the highest it's been, but again, for the most part, on average, looking back the last couple of quarters, the price to cash flow ratio could be viewed as a little high. And again, same thing with the PE, not necessarily looking at it as the main indicator, but just letting you know over the last 4 quarters here, you can see PE between 40 and 57. Right now, PE is sitting at 70. So this is why, again, I'm saying, in my opinion, we could potentially have a sell-off. We were trading just a couple of times book value. And then, of course, the last several quarters, the stock has been on an absolute tear, as I mentioned, going from 12 to highs today of over 86. So now the price to book ratio has kind of gotten a little inflated, in my opinion. We're looking at basically a triple just over the last 3 quarters here, going from 5.68 times book to over 8.25 times book to over 9 times book. Now we're trading over 15.5 times book value. So this is why, again, I'm saying, in my opinion, a sell-off could potentially happen. However, I personally do like this company for the longer term. All of our return percentages are up quarter over quarter, looking very nice. Our gross margin percentage consistently increasing, going from about the 22.5 level over a couple of quarters, getting up to almost 30, and consistently climbing up here into the higher 30s. And now you can see, as of last quarter, we're currently sitting just shy of 34.25%. So we went from 22.5% to 34.25% over about the last 18 months. Definitely nothing to sneeze at, in my opinion. Operating margin is looking very, very well here, going from 2% to north of 5, almost doubling to almost 10, slight pullback to 9.3, jumping up to 12.75, over 14.5, now sitting at over 15.5%. And I believe they were guiding for like 17% maybe operating margin, or maybe that was cash flow. I don't remember. My apologies. But I have a feeling that these numbers will probably be maintained over the next several quarters, if not continue to increase. EBITDA, once again, earnings before interest, taxes, depreciation, amortization, has been consistently climbing as well. As you see, 7.5% up to 10.5, almost 14, slight dip down, back up to 16.6, 18.5, now sitting at 19.2%. So just looking at the growth of these numbers here, to tell me in turn that the stock continues to grow as well, again, it's not necessarily coming off to me as some crazy, unrealistic situation, right? When we looked at some of the numbers on a stock like Nvidia, and then we look at their current market cap, we could very well make the argument, hey, listen, we might have went a little too high too quick and we may see a big sell-off. But with a situation like Vertiv, I think we're potentially just getting started. And that's why, again, I'm saying, yes, we could see a pullback into the 70s and maybe even the 60s. But if I bought this stock up here right now today, hypothetically at 82.5, let's say, and then I wake up a month from now and we're at 72.5, chances are I would more than likely buy the dip. I would average down. If I liked it at 82.60, I would love it at 72.60. Plus, also, we're probably going to have some momentum and some positivity and a little rally going into next quarter's earnings as well. And I know, again, that the outlook was potentially weak, but we don't really know that. And if everyone else is fearful, then you know what they say. Obviously, it may be time for you to get greedy, but we'll see what happens. But again, technically, the stock really bounced back up when it should have kind of stayed down, in my opinion. So this is why to time it perfectly here at 82.67, in my opinion, just seems a little difficult to call. But the inventory turnover was in the high 5s, got up to above 6. Dipped down 597, 53, 53, up to 534, up to 544. Okay, so that's starting to make a little bit of a rebound. Asset turnover was bouncing around, got up to 0.93, down to 0.91. Yeah, the debt has been decreasing. So we see debt to assets, our ratio dropping, debt to equity dropping, right? Long-term debt to equity and assets dropping. Switching over here to the balance sheet, we can see the assets have been consistently growing quarter over quarter, and the liabilities have been growing as well, but it seems like they're not growing at the same rate, right? So going from about 6.8 billion up to 8 billion is what, about 1/5? So that's about maybe 20%, you know? Well, I'm rounding off the top of my head. But as you see here, total liabilities from 5.48 up to 5.98. I mean, you're talking about 10%, maybe less. So that's why right now the growth in assets, in my opinion, is outweighing the growing liabilities. And assets minus liabilities yields total equity. And you can see that the equity, a slight dip there, but the equity for the most part has been consistently increasing quarter over quarter, now sitting at a touch over $2 billion for Q4 of 23. Company's holding $3.1 billion in debt right now, but you can see over the quarters we were much higher, almost $3.4 billion. So that came down about 9 or 10% here over the last several quarters. So in my opinion, that's a good sign. As all of these numbers increase, the book value per share follows suit. As you see, we had our slight dip there, and then we climbed up into the high threes, the low fours here, 436, 449, as of last quarter, $5.28 a share book value. Again, if the company had to close its doors, liquidate its business and everything in its name, it technically would be worth about $5.28 a share. So this is why, again, the price to book was up at, like 15 and a half times this number. So, again, that technically really has been climbing high with the stock. And that's why I'm saying a few of these metrics may be indicating to us that a sell-off in the short term could happen before we continue that long-term growth. But overall, the revenue has been climbing nicely. Cost of goods really seem in line. They're not getting too hectic. Total revenue minus cost of goods yields gross profit, which seems to be consistently increasing, recently going from that 400 million mark into the 500 millions as of last quarter, 638 plus million on the gross profit side. So that obviously is a good sign in my opinion. Gross profit minus operating expenses, which seem to be basically staying in line with the growth of revenue. Gross profit minus operating expenses yields operating income. And we can see we had tens of millions up into the hundreds of millions. And you can see it really only lasts like 2 or 3 quarters here with these milestones, right? These levels. And we can see we went from about 220 million to 254 million. Now as of last quarter, 289 million, which means, again, we're looking for a slight pullback in the revenue back down to the 160s, back into the 1.6s, excuse me. So it might not happen immediately next quarter, but probably, in my opinion, the quarter after, this operating income could potentially break above that 300 million plus benchmark. So we'll see what happens. But a lot of these numbers are growing nicely, So again, really, the debt, in my opinion, really isn't a big red flag. Maybe I would look more towards the price to book ratio, and of course, technically missing earnings and technically giving weaker outlook for this next quarter coming up, in my opinion, would basically be the argument for a potential short-term sell-off. Other than that, I have to say, I really do like this company. Again, just over the last 5 years, revenue went from, 4.4 billion. Now we're up to almost 7 billion. So, the revenue has jumped up annually about 50% over about the last 3 or 4 years. So it's definitely nothing to sneeze at. We are seeing, again, consistent misses here, but it doesn't seem like a big deal. It really doesn't seem like a big deal in the moment. Plus, again, looking at what the company does, right? Cooling systems for these very intricate data centers. And now, again, partnering with a company like Nvidia. $5.5 billion backlog, right? So this is what I mean. That they're in a phenomenal sector for the time that we're in right now. So if everyone watching this video is bullish on this company, in my opinion, I can see it and I can agree with you. You can see the debt was down nicely here in 2020 and happened to jump back up to above that 3 billion mark. But again, in my opinion, not really a big deal. Free cash flow, cash on hand here, almost 800 million. Very nice. Debt 336 billion down to 312, 311, slightly up to 313. In my opinion, not really a red flag. The cash has been growing. You can see Q3, 505 million. As of last quarter, 788 million. So the company is liquid. The free cash flow in the middle here was bouncing around 142, drops down to 14, and then has been climbing 227, 222, now 308 as of last quarter. But we're going to come back now. We're reporting Q1 with potential weakness. So yeah, we may see the cash flow take another hit. We may potentially miss on that revenue side. So this is why I'm saying in the short term, we could see a dip. In the long term, though, I do like it. We have assets outweighing liabilities. But yeah, overall, I like it. Let's look at stock charts very quickly. I'll let you go. And we can see also on the technical side, we could make the argument that we're a little high as well. I mean, first of all, we have this massive run, but also we can see that the RSI now up here at about 76 and a quarter and has been there for several days as we gapped up and have been essentially kind of staying flat minus this pop today. So that's why we may have potentially topped out, in my opinion, at that 86.63 mark. And we may pull back here to about sub 80 and fill that gap right there, 79.66. And then we could potentially retest the mid-Bollinger Band like we have a few times and come back down here to the very low 74s, in my opinion. So you may be able to buy this for about a 10-12% discount. But I will say, even here when markets were rocky, for the most part, see, you had a dip down here below the moving average and the mid-Bollinger Band, and then it immediately reclaimed it. And then you had the drop again going into the end of October, and then the stock immediately reclaimed the mid-Bollinger Band. We had the retest, and it bounced, and you have a retest here in November, and we bounced. And again, you can see the slight break here right as the ball dropped, and it immediately bounced and got back above the mid-Bollinger Band. Here's another retest here, February 13th, and then it immediately bounced. We had the flash crash through Feb 21st, again, down to 55, in my opinion, justified, and then it was immediately propped back up above that mid-Bollinger Band. Then we have another test here, March 11th, and you can see that we bounced right off that mid-Bollinger Band and continued to climb and make new highs. So this is why I'm saying, in my opinion, a situation like this, sometimes these pullbacks are very healthy and, could lead to obviously continued growth afterwards. So that's why when you're looking at a situation like this is what I always say. In my opinion, yeah, you may initially buy shares up here and it may be viewed as high. If we fast forward 60 days from now and the stock's back at 55, let's say, right? That's, well, 55 there. But that probably will make you emotional. You'll probably get very upset and you'll start to get aggravated at yourself and not believe and you'll start to lose confidence and you won't believe in your initial analysis of the overall company and the big picture, which is why I always say, in my opinion, to piece your way in, never go all in, unless of course you happen to catch the low of the lows and you get blessed with that fill. But overall, this is why it's always good to piece your way in, because if there is a pullback, like we say, if we liked it at 82, we'll love it at 74 if we pull back and retest this mid-Bollinger Band. But also on the flip side, similar to something like SoundHound, right? We saw what was potentially coming down the road in the longer term. We saw that they kept signing new deals. We saw that the revenue is forecasted to continue to grow quarter over quarter and year over year. So if we, quote unquote, know that we have a situation, in my opinion, that could work out very well down the road, then when you have big sell-offs like this, in my opinion, it should be viewed as an opportunity, not as negativity. So hopefully the company continues to do what it's doing. And if you did happen to buy here in the 70s and the 80s, and then we do have a pullback, let's say, to this moving average of 65, I would just hope that, in my opinion, unless, of course, anything really negative was reported, I would hope that you see the growth here as I do. And again, if we do have 20-30% sell-off, whatever it is, in the moment it might seem extreme, but overall it could be viewed as a very nice buying opportunity. So again, VRT here, Vertiv Holdings, in my opinion, overall, I mean, you give this thing a year or two, as long as they keep doing what they're doing, chances are you're probably going to see $130 to $150, in my opinion, and you could very well double from this point. However, again, technically missed twice on revenue the last 2 quarters and issued weak guidance moving forward for Q1 2024, coming up in about 60 days from now. So we could take a look at it right before earnings again and do another little update. But in my opinion, short term, potential pullback, might get a better price. Long term, I have to say, I think it's a winner. So I don't remember exactly who brought this to us, but I know that you guys mentioned in the comments, oh, could you look at this stock? Could you look at that stock? And I've thrown all the symbols on the board, and VRT was the next one in line. And again, in my opinion, I like it. I think it's a winner here. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, right? And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But moving forward, like I always say, I understand that markets are rocky and they're volatile and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for a moment. Have a good day.